The Japanese yen is a well bid ahead of 115. Do you expect those safe haven flows to continue to reverse?
So I think our view on the yen is somewhat different. Look, the yen's a currency which is very sensitive to a risk-on, risk-off environment. And I would argue that while it looked like going into the end of last year that the bulk of financial tightening we could be expecting, or tightening of financial conditions we could be expecting in the US would come mostly from increase in the Fed funds rates. I think that would have been positive for the dollar, and that's kind of what has driven dollar yen higher as well, or the yen weaker. But the fact that now we could be considering a combination of rates higher, as in policy rates higher, but also potentially an unwind of the balance sheet, which could start to tighten financial conditions through, for example, impact on credit markets, equity markets, etc., could make for a much more uncertain risk environment, uncertain macro environment than what was earlier envisaged. And it's not clear to us that yen would necessarily be the one sort of driving the weakness of other currencies versus the dollar in that environment. So not necessarily very negative, the yen at this level.
And of course, one of the reasons why the Fed needs to take these actions is to cut off the heads of the inflation hydra. So when it comes to inflation fighting credentials, when you look at the outlook for 2022 for Asian Forex, Samir, how much of it comes down to whether or not their central banks are good at fighting inflation?
So it's a good point, Midi. Look, the big difference between Asia and the rest of emerging markets in 21, and why Asia managed to be much more resilient and outperforming a lot of the rest of the EM complex was, I would argue, one, of course, because the inflation pressures in this part of the world were relatively more benign compared with everywhere else. There was a lot less sensitivity, for example, to supply chain bottlenecks and so forth, but also much better credibility of central banks in being able to anchor inflation expectations better. Now, that would potentially get tested yet again, and it's not necessary that what was in 21 will necessarily get repeated. But I would still say the central banks keeping an eye on the ball and tightening along with and potentially ahead of the curve remains a very key ingredient to why we still think Asia would be able to relatively manage this Fed balance sheet better than in previous sort of Fed cycles.